Welcome to the Planning for Life podcast with certified financial planner professional Russell Jacobs and financial life advisor Carl Coolidge. Carl and Russell will share creative strategies and ideas for overcoming challenges in your personal and financial life. Inevitably, life happens, and we will empower you to reach your destination. Thanks for joining us. Now, on to the show.
Hello and welcome to another Planning for Life podcast with Carl Coolidge. Today we're going to talk about the benefits and drawbacks of investing in real estate. Now, Carl, you've been doing financial planning and all of that for quite a long time. And I know that you have, especially when you're working with physicians and higher income earning clients, that real estate seems to be very attractive. Before we really jump into the benefits and drawbacks, how often are you having this conversation, and what is the rationale that you hear from your clients when they say, hey, Carl, I'd really like to invest in real estate?
Well, I think especially given the area we're in a coastal region, and obviously we live on the coast, so real estate is typically more valuable here, and we have a lot of in a high tourist area, and also anytime you have the beach or water, you get a lot of people attracted here. So it comes up quite often. I think what people are looking for, and really what we talk about a lot with our clients, is having diversity, not only among their investments, but the types of investments they have. So I do get asked quite a bit by clients, if they think this is something they should be involved with, or a lot of times, depending if they're high net worth or good cash flow or have good cash flow, then they will get requests from friends, family, colleagues, business partners to see if they want to invest in something.
So after you have the conversation and you know that it's something that is part of their plan, since you guys are very, very planning focused firm, what are the benefits and drawbacks that you have seen over the years? Let's start, if you don't mind, on the positive, and then we'll end on the negative, and then we'll bring it back down to whatever sort of advice you might have for people considering investing in real estate. So what are the benefits, or what are the really great ideas that you've heard over the years?
Well, I've got a couple, Matt, that I think have made a lot of sense. And again, with anything, I'll preface my comments by saying it's per each individual what's going to make sense for their situation. I know everyone knows that goes without being said, but just to let you know. But things I've seen that have really been good or interesting are obviously income producing rental properties. So you either have a taste for it or you don't when it comes to having tenants and rental properties. Yes, you can hire management companies to take a lot of that weight off of you, but the positive about them is that, in essence, you can have your renters or tenants pay for the cost of owning this property for a very long time. And then if you obviously hold it until the loan is paid off, then you can reap a supplemental income that you can receive ongoing into retirement. And even if you look, I'll have some clients, we look at it if they have cash and they can pay for properties, then we look at things like cap rates and rates of return to see how beneficial this would be versus some other traditional type investment. So that's one thing I've seen quite a bit of that can make a lot of sense and fit into a lot of people's long-term financial plans. Also, we have a lot of small business owners that we work with, and we've seen the benefits of them actually purchasing their office building or the real estate that they work out of. And again, I won't get into tax considerations. That's a conversation with their CPA, but it allows them to have something they can utilize and get meaningful years of business out of. But then also, when they do decide to retire or have someone come into the business, they've got an additional asset just besides their business. They have the real estate, which they could either sell at the time, and you would assume reap some sort of gain, realize some capital influx, or they can look at renting it out at that point and then, again, get a long-term supplemental income from that. And then one other I've seen, and really this is just overall advice, I would say, is that those that have a really clear strategy and a purpose for the real estate they're getting involved in, that's where I've seen it be very beneficial and work well for them. So what I mean by that is, if you're going to buy a rental property and you're doing it for long-term rental accumulation or supplemental income stream, don't go into it thinking you're going to flip a property in a year or 2 years and make a lot of money. Know the reason why you're getting into a property, and also know the area you're getting involved in, because as the old saying goes, if a deal's too good to be true, it probably is. So I think just doing your homework, really understanding what is the purpose that I'm buying this for, because I've had clients in the past that'll just have real estate, and I'll really ask those tough questions of, why do you really have it? Because it sounds cool, because you think it'd be nice to have multiple properties, or is there an end game here?
I love you really know what you're buying. And the other one is location, right? It's always about making sure that you're buying the right stuff in the right location. But before we jump into the drawbacks of this, where can somebody go, right? So how do you help direct people? So if they are interested in real estate, are there any local organizations? Are there any books? Not that you're necessarily endorsing one over the other, but where's a good place for people to find out more information so that when they are going to invest in real estate, potentially, that when you do ask those tough questions, that they've already answered them because they've done their due diligence?
Well, there's certainly plenty of websites at this point, or books, where they can give you the overview of how investing in real estate, has positives, the negatives, and kind of take you through the basics of it. I think it's crucial to find a realtor that you can trust and work with, someone who's helping you really find those opportunities, because again, all of our clients are very busy. They have, successful jobs. They're involved in a lot of different things. And so to spend a lot of time searching out deals in real estate is rather challenging. So finding a real estate agent that they can trust and work with, I think, is important. And also having a discussion with their CPA to make sure, or to understand, I should say, how it will impact their situation. And those are the two people they really start with. And then a lot of times we're used as a sounding board to say, hey, I found XYZ property. I've talked to my accountant. We've worked with the real estate agent. What do you think about it?
Truly a team effort. And I love that. And this is one of the reasons why Jacobs, Coolidge and Company has been so successful over the years, is because you do take not just a consultative approach, but also realize that a lot of times other professionals need to be involved. And if you're not getting those other professionals involved, everybody, you're probably making a mistake, right? I mean, this is not a knee-jerk decision. Is that fair? Absolutely.
I mean, I think if you go back to the real estate bubble, and not to dwell on a bad time, but if you really dig into it, it was a lot of poor decision making really across the hierarchy of people, from the individuals investing in real estate, the bankers lending the money, the realtors maybe pushing, more expensive homes than they should have, because just because you can qualify for a loan doesn't necessarily mean you need to have that much of a mortgage. So I think those were all key factors, but you've got to find a team that really can have your best interest first, so you're making right decisions, because it is a long-term investment. And I think that's what, going back to my point about the bubble, is people started treating real estate as a short-term investment, and it's really not.
All right, let's switch gears here and let's talk about the drawbacks or some of the mistakes that you have seen over the many, many years you've been doing this when it comes to people investing in real estate.
The first one I would say that I've seen quite a bit is, investing in a subdivision, or starting something from scratch, where they say, okay, I can find this 20 acres of land, I can put in a subdivision, I can sell all the homes and make plenty of money doing so. The problem is, if you have no expertise or experience You don't realize all the startup costs that are associated with doing a subdivision or doing something to that scale. And so, unfortunately, I've seen several individuals get burnt by that, where they tried to make a go of it, but they didn't realize all the associated cost before they could start making any return on their money. So that's one of the big ones I see. Another big one, which was back during the real estate, high point and then through the bubble, was everybody wanted to get into house flipping. There's 20 shows on television about house flipping and how you can make money doing it. But what was happening is you've got to be in certain parts of the country where house flipping really makes sense. And you also, again, like anything, have to have some knowledge of what you're doing and why you're flipping, and, what details you add to homes to make it make sense. And if you start dumping all of your extra cash flow into those and it doesn't work out, then you end up in a pretty bad position. So I've seen, again, several people do that, where they thought they could make a quick buck flipping homes, but they ended up just eating through cash flow and not making much of a product. Or no profit. And lastly, I would say there's just too much leverage. Again, when things were very good, if you purchased a home, a piece of property, a commercial building for $500,000 and it appraised immediately for $750,000 or $800,000, then you saw people taking that equity they had, that $250,000 to $300,000, and then using that to purchase additional properties without having to put any money down or have skin in the game. And so, again, that goes back to really what happened with the bubble, is that people were doing things they probably shouldn't have been doing. Bankers were probably lending to people they shouldn't have. And so it was a trickle down effect. And again, I've seen that. And some people in the short term will be very successful doing that. But over the long term, that's generally where it becomes an issue. And once you taste getting those kind of returns in the short term, it's hard to know when to stop doing that.
Yeah, it can be amazingly addictive, can't it? I mean, it can be one of those things where you're, it's like, it's gambling. I mean, not to be too negative there, overstating. Now a
house is the great American dream, and if you can find a way to make money doing that, everybody's excited about it. But it's like anything, you have to do it in moderation, or it will get you at some point.
You did bring up, and this is more of a tangential part of the conversation, but you did just bring up the idea of leverage, which I'm assuming is something as a financial planner that you aren't a huge supporter of, or am I not allowed to ask you that question?
I will do my best to answer that, Matt. I do like appropriate leverage. I would say what I've told clients is there's good debt and bad debt. And I think when debt is structured appropriately for someone's situation, it can be very powerful. I've seen debt probably work the best when it comes to income producing properties or rental properties, because as I mentioned earlier, you can have tenants, in essence, pay your payment. So it can be very powerful, but again, it's very specific to someone's situation. But people by nature want to eliminate debt, and we try to have a conversation to say, okay, we know your feelings, but let's make sure we're attacking good debt or bad debt and that it fits into your entire picture or financial picture.
And that's where everything becomes the sweet, sweet music that you guys are able to create at Jacobs Coolidge and Company, is taking everything into account. If you are not working with a true comprehensive financial planning firm, somebody who really does take all of these things into account to be able to provide you with well-educated advice for you to make that decision, then I really truly believe that you're missing out big time. Now, so we've talked about some of the good stuff and we talked about some of the bad stuff. How about any of the middle of the road stuff? I mean, do you see, let's just for giggles, let's talk about second properties and how that works into your decision with financial planning. Is it all of the same stuff that we just talked about? Because that's not necessarily something that you're going to be investing in to produce income immediately. It just might be something you enjoy. Would you mind sharing with our listeners a little bit about that sort of conversation that you have with your clients?
Absolutely. It's, again, some of the similarities. But again, we have a lot of clients who want a second home or a beach home, a mountain home, acreage property where they can have a farm or do things along those lines. And so I think it's a little different conversation in that, to your point, they're doing it for enjoyment, not just for a rate of return. If you can find both, then it's a bonus where you can have something you enjoy that may provide, gains as you go from a value standpoint, or eventually can provide you some sort of rental income. But to me, again, it goes back to when you're doing the planning, are they doing all of the other things they need to do, which allow them to meet the goals that they've laid out? Can they then do a second home or a property that, if it does well or not, it doesn't really affect their financial situation? Is more of an enjoyment conversation for them, where they can have family during the holidays, or they can go there for, summer or fall vacations. So again, you've got to find that thin line between, is it enjoyment or is it investment? And if you get both, I think that's just a bonus win.
I love that. If you get enjoyment and an investment out of it. And if you heard the first part of this, or if you recall back to the first part of this, that was one of the things that Carl was talking about, was this has got to be something that you're passionate about, that you enjoy, because if not, it can be very frustrating and tiring. It's not one of those, you invest in real estate and then you can, kind of wash your hands of it. That's not generally the situation, especially with flipping. I love that you brought that up. People will want to flip houses and then realize they have absolutely no idea, one, how much contractors cost, and then two, that they don't know how to use a hammer.
Well, yes. I mean, it's just, again, there can be tons of problems that you're not aware on unless you, A, know what you're looking for, or B, do your homework. So it's something, you're right, you have to have a taste for, because you just don't buy a property and then collect the check every month. There's definitely a lot involved into it, a lot of maintenance. And of course you have, repairs with any property, as you do with your primary residence. So you've got to factor all that in when you're looking at the math or the calculations to say, is this going to make sense in my total picture or not?
Closing thoughts, Carl. What sort of closing ideas or sort of truths or statements would you like to pass on to our listening audience?
Well, I would just summarize and say, I think real estate is absolutely a great fit for a lot of people, again, depending on your situation. And as long as you really do your homework, or find somebody qualified to really assist you with doing that homework, really looking into the numbers and the details, I think it can be a nice complement to traditional, stocks, bonds, mutual fund type investing. And for business owners, complement their business. So it's like anything. Understand what you're doing. Don't just do it because you think it sounds interesting. Really dig into it and know what you're getting into.
Carl, thank you very much for your thought leadership today.
Thank you, Matt. I appreciate it.
And we just spent a little bit of time with Carl Coolidge with the Planning for Life podcast from Jacobs, Coolidge and Company, where they are true financial planners and really do try to do their best to find out what makes you tick, what you're really looking for, what your long-term goals are, and really what retirement and investing should look like just for you. It is not a cookie cutter approach. It should never be. And if you don't have a financial professional, especially a financial planner, who is asking you questions and talking about the things like we just talked about today on this Planning for Life podcast, you should probably look at giving a quick call to Jacobs, Coolidge and Company. So for everybody at JCC, this is Matt Halloran, and we'll see you on the other side of the mic very soon.
The content is developed from sources believed to be providing accurate information. The information in this material is not intended as tax or legal advice. Please consult legal or tax professionals for specific information regarding your individual situation. The opinions expressed and material provided are for general information and should not be considered a solicitation for the purchase or sale of any security. Russell C. Jacobs III, Carl B. Coolidge, James Jacobs, and William Schwartz are registered representatives of and offer securities, investment advisory, and financial planning services through MML Investor Services, LLC, member SIPC, Supervisory Office, Jacksonville, Florida. Jacobs, Coolidge & Company, LLC is not a subsidiary or affiliate of MML Investor Services, LLC, or its affiliated companies.